Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Well, until euro currency still stands in the broadening triangle and really hasn't any direction hasn't been chosen yet, and market still stands on the way to the upper border of this triangle. I suspect that we have some time to dedicate to some other currencies. And currently, I have taken a look across the board today. And between the majors, among the majors, I think that the most interesting right now for the immediate trading is the Japanese yen still and the Canadian dollar. On the Canadian dollar, if you'll take a look at the daily time frame chart, you'll see that we have the brand body setup, but this is not the absolutely perfect setup. This is mostly should be called as the lookalike, because market has stand a bit long on the way with the retracement to the FIB support than it is assumed by the regular brand and body setup. But still, the thrust on the Canadian dollar is really very interesting. I will show you. So that is the daily Canadian. So you can see the thrust is not bad here. It's acceptable for trading. But take a look. Market should hit this support area within the 3 days below the 3x3. But it has hit it on the 5th day. But that is also was the daily oversold. I don't have the indicator on this chart, but I have checked this. This was the daily oversold, and you simultaneously have got the daily stretch pattern that combines with the brand body buy, and that is also the monthly pivot point. So from that standpoint, the setup in general is acceptable for trading as the brand body, with the target stands somewhere around 112 probably. So market still has some room till this area, and now market could show some bounce to the downside on the intraday charts. At least this setup is interesting compares with all other currencies. On the Great British Pound, on the Euro currencies, not really no setups for trading right now. So we will dedicate today's research to the Japanese yen again, since we already have some preliminary work that have been done previously, and we know that in general this action to the downside right here is the monthly bearish engulfing pattern, and in a short-term perspective we stand in a retracement up right back inside the body of this pattern. That is normal and common action that market usually shows in the 90% of cases when it forms the engulfing pattern. Then it shows minor retracement right back inside of the body of this pattern. So now we stand with this retracement. So this is really short-term setup. This does not mean that the overall context is bullish. It's mostly bearish rather. But in the short-term perspective, trend holds bullish here, and we stand with this setup that still with this bounce to the upside that still has some room still to the target. And in fact, market just have passed just half the way to the target. In general, this thrust up and this retracement to the brand body buy on the weekly time frame chart. And on previous week we have traded this motion right to this area. Now we will start to trade the second part of this motion, because the target of this brand body trade stands approximately around 103.65 area. This is also, take a look, the monthly pivot point, previous swing low. So market has chances to reach this area, but as this is just a retracement right back inside of the engulfing pattern, it's very difficult to promise that market will definitely hit this area. Well, following by the setup of the brand body, it should do this. But when you deal with the retracement right back inside the body of the engulfing pattern, you never know whether it will be 3.8 retracement or where market will show the 50%, 6.18. It's very difficult to say. But in general, if we take a look in the development as how market behaves on the intraday charts, well, I think the chance is still here that market could reach the final target of the bread and butter trade. So that's why we will focus here, because this setup in general is rather clear, and you just need to watch for that, and you will understand if something will going wrong. You will understand that something has been broken, and market probably will turn to the downside immediately. But right now, I think that I don't see any signs that could suggest that right now the bread and butter will not work and market is turning to the downside. Absolutely not. So that's why until as we could say that pattern is valid until it's not. So currently we could say that pattern is still valid. I mean the bread and butter weekly trade. Well, trend here bullish is bullish on the daily time frame chart. I don't have this indicator here, right here, but if you will draw the MACD, you will see it. Now let's shift to precisely to the tactics of the trading of this pattern. On the 4-hour time frame chart, our task and target for previous week was this resistance. When we discussed this situation on Friday, I said think about the taking profit around this area, because that will be the agreement, right, and the 4-hour confidence resistance. So this is the confidence resistance, this major 3.8 fib level, and that is also, take a look, 1618 extension of this minor initial ABCD pattern that we have traded. Okay, so weekly pivot point was the 100% extension. It has passed through it. We said that market should reach to this area. So that has happened. As market has hit the ultimate level, ultimate target of this minor ABCD, it should either jump to the increasing of the scale ABCD motion. So I mean, what does it mean? It means that this move should become the AB leg, and now it should be the BC leg. If you know the fractal framework and how in general waves develops on the market, you should understand that. So now this so market should jump either to the increasing of the scale of the motion. So this should be AB leg, then CD, and BC leg and CD extension, or it should turn to the downside. It should break the tendency and reverse another direction. Well, by taking a look how market behaves around this area, I would suggest that probably we have more chances to get BC leg, just increasing of the scale and then action to the upside. So I expect to see some sort of the bigger, larger ABCD pattern right to the target of the bread and butter. It's 103.65 area. Another reason why I think that here we should get the compounding ABCD small action rather than small retracement and turning to the upside is twofold. First reason is that this is really significant resistance, and that is the ultimate target. When the market hits 1618, it usually shows deeper retracements. This should be the 50% or even 618. That's absolutely normal when the market turns to the increasing of the scale. Also, take a look at the weekly pivot point. This level hasn't been hit yet and hasn't been tested by the market yet. That is also fib support, by the way. Well, that's why I think that as to the upside, as to the downside right now in the short term, we probably should get the compounding retracement. I mean, not the single leg, not just this BC retracement, so single leg down and continuation, but ABCD retracement down and continuation to the upside. So you could see it better on the hourly time frame chart. We'll drop to the hourly time frame chart. Here's my expectation, what I would like to see here. That is increasing of the scale, the first leg, AB leg to the upside, right to the confluence on the hourly time frame chart. That is also in agreement with this ABC smaller pattern and extension, 1618 extension. Now I would like to see compounding ABCD action to the downside, two-leg retracement. So if we suggest that this leg down will be equal to this one, so market will show harmonic ABCD retracement, then we will get precisely very acceptable level for this as the target of this retracement, because that will be the 50% support. That will stand in agreement with this natural support resistance area. So you can see this was support, bounce up, resistance, resistance again, breakout, support, some sort of the support. Okay, so that will be a nice area to watch for. And what is more significant is that this level in general will be very close to the weekly pivot point. So market just could test it somehow, hold here and turn to the upside. Here as well you can see smaller, even smaller ABCD retracement as well. So you can see the fractal is how they work. And then I would like to see the extension. So if this extension will start right from this area, okay. In this case, let me adjust the Fib extension tool. Okay, so assume that it will start somewhere from the 50% level. It should be somewhere right here. Take a look. In this case, that will give us an agreement. 100% extension will finish right at the target of the brand bodies, 103.65 area. So that is the scenario that I would like to watch for on the Japanese yen, and I think that's rather interesting here. And at least this is working in active context that you could monitor, manage, and trying to trade. And you could start with this very soon for trading with this setup on the Japanese yen. And this setup is rather clear. You understand what to expect, what the motion is, what the movement right now we see on the market, where is the target, and where is the invalidation point of this setup. On the Canadian dollar is almost the same attractiveness. The setup is attractive as on the Japanese yen. On the other currencies, guys, I think that we should wait a bit more. Maybe market will form something else. But right now, I like the Japanese yen and the Canadian dollar most of all.